My name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat.
Chicago wheat. Since mid-February, the market has taken a 3 steps down, 2 steps up, and repeating or trying to repeat, gradually narrowing the range and possibly creating a descending triangle pattern, which currently 536 to 562, though I will go on to that a little bit later. It is not a perfect pattern by any means. Actually, I'll go on to it now. As today we've been testing the bright green upper trend line and the combination of the green short medium moving average and the gold long moving average. I've got a feeling possibly maybe morphing into a sideways triangle, but we'll talk a little bit more about what's going on anyway. The bright green upper trend line actually was reinforced, however well or badly, by the nearby upper tine of the newly drawn February to March bearish shift pitchfork, which is currently at 561, and the flatlining mode medium moving average currently at 563, as well as the December 2020 low just above at 566. And the combination of the flatlining green short medium moving average currently at 570 and gold long moving average at 571, just above that. Now, if this pattern was to hold out, I may very well have to finesse the trend lines that I've just said, or even abandon the retire of this pattern or move it into something like a sideways triangle potentially. I'll wait and see on that, though I do acknowledge the chance for a February to date possible double bottom pattern. However, I also should point out, as I said 4 weeks ago, and I quote, the flatlining green short medium moving average and a very slowly declining medium moving average, these two along with the short moving average currently at 557, are right now forming a bow tie formation, crossover. The moving averages are not in the right order, but they are most definitely forming a bow tie pattern with right now some slight bearish overtones, though this of course may change. So what you have to look out for is between 15 to 20 sessions from today, so that's between the 4th to the 10th of April. Look out for one or more of the following: a change in trend, a reinforcement of a trend, and volatility. End of quote. Well, today we are one session over from the window described, and we really hadn't seen until today much. So I'm now wondering if the possibilities are that, how shall I say it, it's arriving late, possibly even arriving not at all, but it looks like it's arriving late. Right now we do seem to be moving towards a possible double bottom scenario. Wondering if that will include a descending triangle pattern or the new potentially sideways triangle pattern or not. So for all that, just keep an eye on that descending triangle idea for now, but be prepared to have it changed. Chicago corn. A major move was seen here at the end of February and going into March. The end of the upwards move was seen since the start of the year, and a quite sharp move lower. At the time I said, and I quote, all this raises a question as to whether we have potential here for further bearish halfway hesitation or a double bottom. It's too early to say right now, end of quote. Now, I even laid out some potential targets below for a move lower, but these turned out to be wrong, and I've retired them all. Instead, the market followed the path for a double bottom with a primary target X at 497 and a secondary target X2 at 504. We're very nearly at 497. I use the second month continuous for this one. So we're very nearly at 497 right now. Additionally, as I said 2 weeks ago, and I quote, to offset this bearishness I drew last week, so that is now 3 weeks ago, late November 24 to early March 25 bearish shift pitchfork for the recent move. Right now I do not see much confidence in this pattern, as it's still there nevertheless. The reason I have low expectations is because of the possibility that the whole mid-February to date action might be a bearish halfway hesitation, end of quote. Now, as I've previously stated, the bearish halfway hesitation is no longer valid, and yesterday prices pierced both the green short medium moving average on the upside, currently at 482, and pierced and closed right on the dark blue middle tine, currently 489 of the bullish shift pitchfork. Today we're even higher. So target X at 497 and target X2 at 504. They're the ones to watch out in the immediate heads, but also the idea of further follow on after the double bottom has reached its peak. Kansas City wheat. Since mid-February, the market has taken a 5 steps down, 3 steps up, and repeating or trying to repeat, gradually narrowing the range and possibly creating a sideways triangle pattern type, currently 567 to 616. It is not a great looking pattern, by any means, but it still exists. Today we are resting on the combination of the pink lower trend line, currently at 567, plus the lower trend line extension of the November 23 to April 24 descending triangle, currently at 569, plus the middle sign of the February to March bearish shift pitch hook. We're also, and have been for about 2 weeks, gyrating around both the mauve medium moving average, currently at 577, and a gold long moving average, currently 579. Now, if this pattern is to hold out, I may very well have to finesse the trend lines or even abandon and retire this pattern. I'll wait and see on that, though I do acknowledge the chance for a February to date possible double bottom pattern. However, I should also point out, as I said 4 weeks ago, and I quote, the flatlining green short medium moving average and the very slowly declining medium moving average, both these two along with the short moving average, which is currently at 557, are right now forming a bow tie formation crossover. The moving averages are not in the right order, but they are most definitely forming a bow tie pattern, with right now some slight bearish overtones, though this of course may change. So what you have to look out for is between 15 to 20 sessions from today, so between the 4th to the 10th of April. Look out for one or more of the following: a change in trend, a reinforcement of a trend, and volatility. End of quote. Today we are one session over from the window described, and I really haven't seen that much. So I'm now wondering if the possibilities are, how shall I say, this arriving late, or if they will not arrive at all. Right now we do seem to be moving towards a possible double bottom scenario. I'm wondering if that will include the descending, or rather the sideways triangle that I've spoken about here, or not. In the absence of anything else, I'll just keep an eye on the sideways triangle pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.